All right, the end of another day, and we were looking at this divergence on the daily, and it, we gapped up, and this is a rather strong bar. I was hoping that it traded back and created a shooting star, but didn't really give it to us. And this is a pretty strong bar, but we have this gap right here, and that makes me a little apprehensive about the move up. That gap coupled with this divergence and this move up for the past 4 days, I just have to feel that there's got to be a change in trend, a little consolidation that comes into play, and I would like to see that transpire. I feel more confident about a move up. I'd like to see it close the gap. I mean, 50%, that's a lot to consider. But if we came back to the 38% on the fib, say about 230, came back about 30 points, I'd say that's a pretty good retrace right there. And not impossible. I mean, we could do that tomorrow. It's really no big deal. Yet, that the S&P moves 30 points. Or we could come down a couple of points every day, and that's fine too. I don't mind that. That would be good. I just want to see us fill this gap and maybe do a healthy retrace, and away we go. So on the dailies, like I said, we still have this daily divergence, which is somewhat ominous. And if we look at the 60-minute, looks like the 60 minutes rolling over. You could really kind of call the 60-minute neutral. So you might say it lends itself to a retrace. We'll have to see how we open tomorrow. I mean, there's no catalyst to move it down. It's just really a matter of people taking profits on that move that we've had. And if you look at the weekly, we still have a weekly divergence. And you can see the momentum fading off, even with this strong bar for the week. But tomorrow we'll end the week, and we'll see where that bar settles. I mean, I really doubt that it's going to come back down and trigger it. But maybe next week it might move down and maybe could trigger that divergence. But that divergence doesn't mean a reversal necessarily. It could just be a consolidation. But that's what we're looking at. And it was actually a valuable day as far as if you were hanging out in this channel and training, because you saw a really nice channel built. It's really only 8 ticks apart. A narrow channel is easy for a breakout, but because of that move in the gap that we were looking at on the daily, I don't think anybody really was going to commit to a push up further on the day. We opened up high with a big gap right here and shot up and then just bounced around in this channel. But you could see how it respected the resistance and the support. And then you could put a center line in a channel. And if this channel was like 20 points or 30 points and it started doing this pattern, you could trade in between these lines. Look for double tops at the top. But if you're on the stream with me, if you're trading the day with me, we talk about that often, double tops and how to take advantage of that. So if you're just stopping by, check that out. So let's look at some of the other securities that people have an interest in these days. And we could start with, haven't really looked at them today. Here's BlackBerry. And I'm not even hearing much hype about BlackBerry anymore. I probably just stopped looking at it. The daily momentum's fading off. This is a strong bar down, but not bloody yet. You just have this support right here at the around the 1232. If it breaks that, you could look for a fill of this gap, and it feels as though that's what it's going to do. But we don't trade on feeling. We let the market prove to us exactly what it wants to do. And the momentum on the 60 is bullish, so you could look for that sell-off right there. And we could look at CLOV. I think there was some action on CLOV. So the 60-minute is bearish. I might have said bullish on BB. I meant bearish. But the 60-minute is bearish also. Gave a little test of that low. You might want to watch it for breaking that low tomorrow. But more importantly, we'll take a look at what the daily looks like. And it closed that gap, made that run up. Looks like it's putting in a higher low on the momentum. So really, we just needed to turn around and keep climbing. If you were going to re-enter this, really, this is where you would have done it, 1220. There's no place I would enter here. You just want to see it make a higher high. It might retrace, and then you could re-enter on the next higher high. But it's just kind of churning around right now. But at least you got that gap out of the way. And then finally, what everybody's been waiting for, AMC. And the momentum on the daily is fine. It's fading out. It's dropping off a little bit, but you're in a consolidation. And you guys have been in this consolidation for quite some time, and that's going to be the telling factor. Right now, you just want to see it break that 64.87 plus or minus, actually 64.96, and then you need that break of the 72.62. I know people are talking about dark pools and all of that nonsense, but the reality is you have to put a little sting on the shorters, and they'll cover it. And I mean, this is a risk management game, and these guys are professionals at it, so that's what they're doing. They're managing their risk and trying to figure out which way this thing's going to go. If I guess you call them apes, have the buying power to push it up, then they're going to mitigate their loss, and you guys will be able to move this up. And if you don't have the buying power, then they're going to ride the short down. They probably faded this move in anyway, so their costs are probably pretty high right now. But they just got to see how much buying power you have, and that's really all it comes down to. I mean, don't really be taken with the sleight of hand rhetoric, because you're talking about people that spent years and blood and sweat to build a business. They're not going to compromise it on a trade that they already accepted the risk for when they put the trade on, which is how you run the business. I mean, you put the trade on, there's risk inherent with the trade, you accept that risk, and you move on. And then after GameStop, they account for that too. When they put a short on, they know that there are people out there lurking and clocking shorts and looking to put a squeeze. So, they've taken that into account also, and that's part of their risk management. So it's not sleight of hand. It really just comes down to who has the buying power. And if you guys can organize it, you have the buying power, they're going to close it, take a little bit of a hurt, run, let it run, and they'll make their money somewhere else. So on the daily, again, the momentum's fading off. You need to see that turnaround. And on the 60-minute, I believe it was last week. It looked like it was moving. That's fading off too a little bit. So momentum-wise, today was kind of a rough day on it. But again, you're still in this consolidation. It's the idea hasn't fallen apart yet. As long as you remain in this consolidation, I think if you start making new lows, you got a problem. Start making new highs, they got a problem. And Bitcoin, been hearing them in the news quite some time. Get my charts to oh, look at that, that's nice. You can see the divergence here. You see the lows it was making, but the momentum was moving up as it was making lower lows. This divergence right here really was a signal to get involved. If I were to get involved, I would have wanted to have done it right here with this incredible deviation, divergence. 3105. I mean, that would have been sweet. And that's an aggressive entry. A conservative entry, you would have entered breaking this high right here at 33,230, and then away it goes. So that's on a 60-minute chart. On a daily, for a longer term, I mean, here's the entry right here on the daily. And you can see the same theory. Here's a low on the price action. Here's a low on the momentum. Here's another low on the price action. A higher low on the momentum. Here's a lower low on the price action and a higher, even higher low on the momentum. I mean, that's screaming get involved right there. So, you would have taken it on the break here and you look for a higher high. It'll probably make a lower high, then a higher low, and then take off right there. So this may afford you another opportunity to get in cheap. And then start its run back. You got this gap right here. It'll probably fill in this gap here. I don't really trade it, so I don't know how it behaves with gap fills, but that's what I would be looking at. So anyway, that is my evening wrap. That's what we have to look for. If you like what I'm doing over here, you could support the channel with the PayPal link in the description, or hit the subscribe, hit the bell, hit the like. All of that goes a long way to helping me out. There's a Twitter handle that you could share that with your friends. Come back every day or come in while we stream and talk to me and find out what's going on, and we could chat it up. I'm happy to do it. Sometimes trading is a boring venture, so a little company never hurt anybody. But anyway, thanks for stopping in and having a listen. Have a nice evening.